When we were talking earlier, you said that the signals in global bond markets point to a rapid reversal. Does that include Italy with that 10-year BTP yield heading towards 1%? I know it's a separate case.
It absolutely is a separate case, and that's a really good point, Era. I think Italy is fascinating for two reasons. One is because markets overreacted to populist moves in Italy. There's no doubt about it. The Italian political system is actually profoundly conservative. You always have coalitions. You never really have concentrated power. And I think that's exactly what we're seeing now, which is you've just had a shift in the coalition again. And I wouldn't be surprised if in the next 2 or 3 years, or even sooner than that, there's a new coalition being formed. But the key point is it's very difficult within the Italian political system to do quite dramatic and radical things. That's the first point. The second point, which I think to BTPs that's incredibly important, is that Mario Draghi has created what I like to call a contingent safety asset. And this is effectively, he's transferred to the market the disciplining power on fiscal policy. So if you breach the fiscal rules, you're not eligible for QE. And spreads widen, and the market effectively attacks you, and you have to fall in line within Europe. And you see that that is actually what's happened in Italy, is that as even the populist government ultimately have to say, we're going to fall in line fiscally, because if they don't, spreads will widen, and any options that they have in terms of their own domestic policy are undermined. So I do think what's happening in BTPs is kind of idiosyncratic. It's obviously partly correlated in terms of what's happening to global yields, but certainly the spread could compress materially from here.
Okay, just, you know, if that trade continues, the biggest risk that you flagged in the past 45 minutes, 42 minutes, has been about the risk of some kind of unsettling in the bond market. I want you to take a look at this. It's been the best month for global bonds since Brexit. Can we continue the conversation that's in the GTV library about the BTPs? If in the event of an unwinding of this aggressive vortex in bonds, would something like the BTPs not be ground zero for literally an amelioration of that market?
Well, I think there's two issues here. Whether, you know, as an investor constructing a portfolio, would I want to be outright long of BTPs? No, I wouldn't. Do I want to be exposed to the spread versus, you know, German bonds, for example? I think that plausibly is a much more attractive trade. I mean, personally, I've had that position. I've closed that position now. I don't think it's as extreme or as episodic as I would view it as it was 12 months ago. So you have already had very material compression. But I can certainly objectively see the case for wanting exposure to the Italian spread. I mean, directionally, I think there are very few bond markets outside of EM you would currently want to be outright long. My preference is, in fact, and I think actually it's an insurance policy from here, is you want to be short global rates.